Imagine, for a moment, the world around you. Your smartphone, that electric vehicle on the street, maybe even the packaging holding your morning coffee. What if I told you there's a company, probably one you've never heard of, whose precision technology is silently, invisibly holding countless parts of that world together? A company whose expertise in applying tiny, precise amounts of material makes modern manufacturing possible. That's the unsung hero we're diving into today. We're pulling back the curtain on Nordson Corporation, trading on NASDAQ under the ticker NDSN. Our deep dive today isn't just about, reviewing numbers. It's about understanding a fascinating pivot in industrial technology. We've compiled a pretty comprehensive stack of sources for you, everything from in-depth investment analyses, recent financial reports, detailed company presentations, to the latest news releases, all pretty much hot off the press from 2023 through 2025. These documents paint a vibrant picture of a company at a really critical juncture, skillfully navigating global economic headwinds while simultaneously executing an ambitious strategic transformation of its core business model.
Yeah, and our mission today is really to cut through all the numbers and the industry jargon. We want to help you understand not just what Nordson does at a surface level, but why its strategy and its unique position truly matter in the broader industrial landscape. We're going to explore its formidable competitive advantages, unpack that ambitious ascend strategy that's reshaping its future, analyze how it's weathering recent economic challenges with, frankly, remarkable resilience, and then peer into what its future might look like. Think of this as your shortcut of being truly well-informed about a precision technology leader that's quietly influencing so much of our modern world.
So if that's the grand vision, the question becomes, what does Nordson actually do day to day to live up to that mission? Okay, let's truly unpack this. At its heart, Nordson is a global leader in engineering, manufacturing, and marketing highly differentiated products. Their expertise lies in precision dispensing, fluid management, test and inspection, and surface treatment. In essence, you can kind of think of them as the glue, both literally and figuratively, that holds modern manufacturing processes together. They ensure that everything from industrial adhesives and protective coatings to delicate biomaterials and crucial sealants are applied with the most exacting standards imaginable.
What's truly fascinating here is the sheer breadth yet incredible specialization of their applications. When we say precision dispensing, we're talking about applying materials with nanoliter accuracy that's like trying to accurately place a single speck of dust, but at incredibly high speeds across a vast range of consumer and industrial products. Their technologies aren't just useful, they're absolutely critical during various manufacturing operations. This makes them an essential, though often invisible, part of the global production chain. It's a company with a rich history, too, founded all the way back in 1954. Headquartered in Westlake, Ohio. Nordson has built an extensive reach, operating globally in over 35 countries. This deep market penetration and long-standing presence really underscore its foundational role in industrial tech.
Okay, beyond those foundational activities, Nordson made a really significant strategic move back in August 2022. They realigned into 3 distinct reporting segments. Now, from the outside, that could look like just an accounting adjustment, maybe a mere reshuffling of the books. But is there something deeper at play here? What's the real strategic driver behind breaking up the business this way?
Yeah, you've hit on a crucial point there. This was absolutely not just an accounting change. No way. This was a direct and intentional result of their overarching Ascend strategy, which we'll definitely get into more detail on shortly. The realignment was strategically designed to highlight specific key growth platforms, especially their burgeoning medical and high-tech electronics-focused businesses. For you as a listener, this provides a much clearer, more transparent view of where the company truly sees its future growth coming from. It allows for a more granular analysis of their strategic priorities, how they're allocating resources, and ultimately how each segment is performing against its own unique market dynamics. It's really about strategic clarity and a sharper focus on those high potential areas.
Right. Let's break down these new segments then, starting with the biggest piece of the pie, their Industrial Precision Solutions, or IPS. That makes up a solid 55% of their fiscal year 2024 revenue. What exactly is happening in this segment, and how does it fit into Nordson's broader strategic picture?
IPS is, well, it's truly Nordson's most established business and acts as a foundational backbone of the company. This segment delivers a wide array of proprietary dispensing and material processing technologies that are deeply ingrained in traditional manufacturing. Their products here are engineered for pure, unadulterated efficiency. They dramatically reduce material consumption for customers, which, could be a significant cost saving. They boost production line speed, increasing output, and they often improve the final product's appearance and quality. IPS primarily serves traditional, industrial, consumer durable, and non-durable markets. Think everything from sophisticated packaging lines that package food and beverages, to automotive components, to complex polymer processing. It's the stable, mature core that generates consistent, reliable performance and substantial cash flow. It really acts as a powerful engine room for the company.
Okay, so IPS provides that stable core. But Nordson isn't content to just rely on its industrial roots. They're making a very deliberate push into what they call a significant growth engine, their Medical and Fluid Solutions segment, or MFS. This segment made up 26% of their FY 2024 revenue. What makes MFS so vital for Nordson's future growth trajectory?
MFS is where Nordson is truly pivoting towards the future of healthcare. It's a big deal. This segment focuses on critical, single-use plastic molded components. We're talking about incredibly precise tubing, balloons, catheters, syringes, fluid connectors, things like that. These aren't just ordinary plastics. These are vital, high-performance components essential for dispensing or controlling fluids within complex medical devices and delicate production processes. What makes MFS such a powerful growth engine is that it's an area of intense organic investment for Nordson, coupled with strategic acquisitions. They're capitalizing on the ever-increasing global demand for advanced medical technologies, driven by an aging population, rising chronic diseases, and the shift towards minimally invasive surgical procedures. This isn't just growth. It's a strategic move into a high-margin, arguably less cyclical sector.
And then there's ATS, their Advanced Technology Solutions segment. This is the smallest segment at 19% of FY 2024 revenue, but it's focused squarely on the high-growth electronics market. This sounds like where Nordson is quite literally shaping the future of industrial technology, the real cutting edge.
Indeed, it is the bleeding edge. ATS integrates Nordson's proprietary technology across various incredibly demanding stages of electronics production. This includes precision surface treatment, that nanoliter-level material dispensing we mentioned earlier, and essential test and inspection systems. We're talking about manufacturing environments where the margin for error is, well, basically non-existent. Key applications include the incredibly demanding fields of semiconductor manufacturing, the intricate assembly of printed circuit boards that power every modern device, and the rapidly expanding automotive electronics sector, which is increasingly critical for electric vehicles and autonomous driving. This is where demand for extreme accuracy, that nanoliter-level precision, truly shines. Without Nordson's technology, the miniaturization and reliability of our modern electronics just wouldn't be possible.
That global footprint is impressive, yeah. Revenue diversified across Americas, Asia-Pacific, Europe, that's already a strong point for mitigating regional risk. But there's a particular aspect of their revenue mix that really jumps out and screams resilience, isn't there? Something that makes them particularly robust against economic shocks.
This is where it gets really interesting and truly defines Nordson's business model. You're spot on. In fiscal 2024, a remarkable 58% of their total revenue came from recurring sales of parts and consumables. Think of it this way. When you buy, say, a premium coffee machine, the real gold mine for the company isn't just the machine itself, it's the recurring, often proprietary sale of those specialized coffee pods, right? Nordson has built that razor and blade model into the very core of industrial manufacturing. This isn't just stable revenue. It means during a recession, while other industrial companies see their order books for large capital equipment collapse, Nordson's installed base of machines keeps running, and customers must continue to buy those critical high-margin proprietary parts and consumables to keep their production lines operational. This provides an incredibly stable, predictable, and high-margin revenue stream, making the business far more resilient than a pure capital equipment play. Just to give you a sense of that global footprint again, their FY24 revenue breakdown was 44% Americas, 29% Asia-Pacific, and 27% Europe. That recurring revenue acts as a robust financial shock absorber, giving them consistent performance even in choppy waters.
That recurring revenue model sounds like a powerful differentiator, a real strength. Now, Nordson operates within the colossal industrial machinery sector, projected to grow from $570 billion in 2024 to over $800 billion by 2029. I mean, that's a massive market. But their specific niche, adhesive dispensing systems, is also growing rapidly, expected to reach $47 billion by 2030. That's still a huge addressable market, but far more focused.
Absolutely. And this highlights their incredibly strategic focus. It's quite smart. While the broader industrial market is certainly vast and mature, Nordson isn't trying to capture every single piece of it, which would be, well, an unwinnable battle. Instead, they are very deliberately targeting a specialized, high-value segment that is benefiting from powerful, technology-driven tailwinds. It's a strategy of precision over brute force, finding those highly specialized areas where their unique expertise in accuracy, reliability, and application knowledge is absolutely indispensable. They're playing where they have the strongest competitive hand, basically.
So what are these specific tailwinds pushing demand for Nordson solutions? Driving that $47 billion adhesive dispensing market, what are the underlying forces creating this growth opportunity for them?
Yeah, there are three significant long-term trends at play that are fundamentally reshaping industries globally and creating immense demand for Nordson's technology. Firstly, we have electronics miniaturization. Just think about how small, how powerful, and how ubiquitous our personal devices have become, everything from advanced semiconductors and micro-LED displays to sophisticated wearables. These components require an almost unimaginable nanoliter-level accuracy in fluid dispensing. We're talking about applying materials with precision that's literally invisible to the naked eye. This capability is a hallmark of Nordson's advanced technology solutions products, and you simply cannot manufacture these next-generation electronic components without that level of precision. It's enabling technology, truly. Secondly, electric vehicle EV production. As you know, the automotive industry is undergoing a massive transformation. EV battery packs are incredibly complex, and their assembly demands micrometer-level accuracy for applying structural adhesives and thermal interface materials. These aren't just for bonding. They are absolutely critical for achieving weight reduction, which extends range, and for effective thermal management, which prevents overheating and ensures safety. Big deal for EVs. Nordson's solutions are right at the heart of making these efficient, high-performance batteries, securing components, and sealing them against environmental factors. This trend is only accelerating globally. And finally, advanced packaging. The packaging industry is undergoing a significant shift, driven by consumer demand and regulatory pressures towards more efficient and sustainable solutions. This includes innovations like hot melt tank-free applicators, which dramatically reduce waste and energy consumption. This shift drives demand for modern, highly precise dispensing systems that reduce energy usage and minimize adhesive consumption, making the process both more cost-effective for manufacturers and more environmentally friendly. These aren't just fleeting trends. They are powerful long-term societal and technological shifts that are creating sustained fundamental demand for Nordson's highly specialized and enabling technologies.
Those are some powerful tailwinds for sure. But the industrial world can be incredibly dynamic, right? Volatile even. What are some of the challenges that companies like Nordson face in this industry? It's not always smooth sailing, is it?
Precisely. You're right. While the tailwinds are strong, the operational environment is definitely not without its challenges. The industrial machinery sector, and by extension many of Nordson's markets, is inherently cyclical. It goes up, it goes down. This means its fortunes are closely tied to global GDP and broader capital investment cycles. When the economy slows down or there's uncertainty, industrial customers can pull back on large capital equipment purchases, directly impacting sales. Beyond that, there are ongoing fluctuations in raw material costs, which can squeeze profitability if not managed carefully. Persistent supply chain complexities, exacerbated by various global events, can delay production and shipments. And of course, geopolitical factors like trade tariffs, evolving trade relationships, or regional conflicts can create significant uncertainty, further squeeze margins, and delay customer investments. It's a dynamic, not always predictable environment that requires constant adaptation, disciplined management, and a robust business model to navigate successfully.
Given that dynamic environment, how does Nordson protect its turf? How do they defend their position? Our sources mention formidable barriers to entry in their markets, a kind of competitive moat. So what makes it so difficult for new players to compete? And perhaps more importantly, why do customers find it so hard to switch away from Nordson once they're integrated?
This is truly the essence of their competitive advantage. Their formidable moat, as you rightly put it. It's multifaceted. First, Nordson boasts incredibly deep technological expertise and intellectual property. We're talking over 2,100 active global patents. This isn't just a number. It represents decades of relentless, intense research and development, combined with an unparalleled depth of application knowledge across countless industries. That patent portfolio and the know-how behind it is a huge, almost insurmountable barrier for any new entrant trying to replicate their capabilities from scratch. Second, and perhaps even more powerful, are the incredibly high switching costs for customers. This is huge. Nordson systems aren't just plug-and-play machines that sit on a factory floor. They are deeply, intricately integrated into complex, high-speed manufacturing lines that often run 247. Imagine the cost, the time, and the enormous operational risk involved in qualifying a new supplier, retooling an entire production line, retraining personnel, and then dealing with potential quality control issues during that transition. The disruption to production could easily cost millions, if not tens of millions, for large manufacturers. This makes customers incredibly sticky once they've adopted Nordson's technology. The pain of switching often far outweighs the perceived benefits of a marginally cheaper alternative. And third, establishing a global sales and service infrastructure across over 35 countries is a massive, capital-intensive, and time-consuming endeavor. It's not just about selling a machine. It's about providing direct, on-the-ground technical support, maintenance, and building a trusted relationship that new entrants simply can't replicate overnight. These factors combined mean that buyers have relatively low bargaining power for this specialized high-performance equipment, allowing Nordson to maintain its strong market position and, crucially, its premium pricing.
That paints a very clear picture of their competitive defenses, a strong moat indeed. So, who are their main competitors in this specialized space, the companies that do manage to navigate these formidable barriers to entry?
Right, it's not like they have no competition. When we look at publicly traded companies, the primary direct competitors would be Graco Inc., ticker GGG, and Illinois Toolworks Inc., ITW. Graco is a very direct rival, specializing in systems and equipment that move, measure, control, dispense, and spray fluid and powder materials. They have significant overlap with Nordson's Industrial Precision Solutions segment, especially in industrial and process applications. Think pumps and sprayers. ITW, on the other hand, is a much larger, highly diversified global manufacturer, a behemoth, really. Within their vast portfolio, their test and measurement electronics segment, specifically ITW Electronics Assembly Equipment, directly competes with Nordson's Advanced Technology Solutions segment in crucial areas like stencil printing and fluid dispensing for electronics manufacturing. Beyond these two, the landscape is much more fragmented. It consists of numerous smaller, highly specialized players who might focus on a single application or region. However, few, if any, can truly match Nordson's unique combination of breadth, global reach, depth of technology, and that direct service model we talked about. They've built something quite unique in the industry.
Okay. Beyond those high barriers to entry, what are the specific pillars of Nordson's market leadership that allow it to consistently command premium pricing and, as we've hinted at, really strong profitability, even against these established competitors like Graco and ITW?
Yeah, it goes beyond just the barriers. It truly starts with their unwavering commitment to technological leadership and relentless innovation. Nordson is fundamentally defined by precision, the ability to dispense microscopic amounts accurately at incredibly high speeds. That's their core. That formidable intellectual property portfolio, those 2,100 plus patents, doesn't just protect their existing capabilities, it enables continuous advancement. But it's not just about having sophisticated tech, it's about delivering tangible, measurable economic benefits to their customers. This includes things like drastically reducing expensive material consumption for clients and significantly increasing production throughput, which directly impacts their customers' bottom lines. Profitability for the customer. A powerful real-world illustration of this agile, customer-focused innovation is their next-generation Nordson Quadra Pro manual X-ray system. This wasn't just some internal R&D project. It was brought to market in under a year, with manufacturing lead time slashed from 6 months to just 2 weeks, all based on direct, explicit customer feedback. It's innovation that listens and delivers fast. Then there's their distinctive direct sales and service model. This is absolutely crucial because they don't rely on third-party distributors, which might seem counterintuitive in some industries. Instead, they deploy a global team of highly skilled experts who are embedded directly with their customers. They're on site. This fosters incredibly deep, long-term, and collaborative relationships. This direct engagement not only creates those high switching costs we discussed, but also provides an invaluable real-time feedback loop for their R&D teams, ensuring their innovation stays relevant and directly addresses customer needs. It's a virtuous cycle of insight and improvement. And, as we've already highlighted, the high proportion of recurring revenue from parts and consumables, that 58% is not just a financial metric, it's a competitive superpower. Seriously, it means customers become, in effect, captive consumers for the entire life of the system they purchased. They need the blades for the razor. This creates a highly stable, predictable, and exceptionally profitable revenue stream that act as a powerful buffer against broader market volatility. These advantages combine to give Nordson significant pricing power. And the proof is in their consistent financials. Maintaining gross margins in the mid-50% range and EBITDA margins consistently above 30% is a direct result of this power. When your product represents a relatively small fraction of the cost of a customer's final product, maybe pennies on the dollar, but is absolutely critical for its quality, reliability, and speed of production, customers prioritize performance and peace of mind over a marginally lower price. This allows Nordson to command premium pricing and sustain superior profitability, even against strong competitors.
That's a really comprehensive picture of their competitive strengths, really strong positioning. Now let's really dig into the numbers and see how this all translates into financial performance. Nordson has shown a consistent ability to grow its revenue, right? An average annual sales growth of 6% from 2019 to 2024. But it's their profitability metrics that are truly eye-popping for an industrial company, especially considering the recent economic environment.
Indeed, the numbers truly underscore the strength of their business model. It's quite something. The company's reported annual revenues grew from $2.12 billion in fiscal 2020 to $2.69 billion in fiscal 2024. That growth is impressive on its own, especially considering they navigated through the initial pandemic impact and subsequent economic cycles. But what's truly remarkable, as you noted, is their profitability profile. Gross margins have consistently averaged around 55% over the past 5 years. To put that in perspective, for many industrial companies, a 30–40% gross margin is considered strong, maybe even great. Nordson's ability to sustain 55% speaks volumes about the high-value customers place on their differentiated technology and the powerful stickiness of their consumable sales. Even more impressively, their EBITDA margins have expanded to consistently exceed 30%. That's a key number. In fiscal 2024, they reported a record $849 million in EBITDA, representing an outstanding 31.6% margin. This isn't just good, it's genuinely best in class for the industrial sector, placing them among the absolute elite in terms of operational efficiency and pricing power. This margin resilience, even during periods of softer organic growth like we've seen recently, is a profound testament to their business model strength. It points to their pricing power, the strategic shift towards higher margin consumables, and the disciplined cost management implemented through their NDSN framework, which we'll discuss further. This kind of consistent, high profitability is a hallmark of a truly differentiated, high-quality enterprise.
Okay, profitability is one thing, impressive profitability at that. But how good are they at turning that impressive profit into actual usable cash? Because ultimately, cash flow is the true lifeblood of any company, right? Providing the fuel for growth, debt reduction, and shareholder returns.
You're absolutely right. Cash is king. And on that front, Nordson is a prolific cash flow generator. It's quite remarkable. Their business model, which we've noted as being capital light in many respects, means they consistently convert a remarkably high percentage of their earnings into tangible cash. Just look at the numbers. Between fiscal 2019 and 2024, Nordson generated over $2.8 billion in free cash flow before dividends. That's a lot of cash. In fiscal 2024 alone, their operating cash flow stood at $556 million, leading to free cash flow of $492 million. This represents an exceptional conversion rate of 105% of net income into free cash flow. Converting more than 100% is outstanding. This ability to consistently convert more than 100% of net income into free cash flow is a defining characteristic of a high-quality enterprise. It provides substantial financial flexibility, allowing them to fund future strategic investments, make disciplined acquisitions, service debt, and return capital to shareholders. Looking ahead, the company is even projected generating approximately $4.1 billion in operating cash flows between fiscal 2025 and 2029, underscoring their confidence in this powerful cash generation engine.
So they're generating impressive cash, lots of it. How are they deploying it? And what does their balance sheet look like after some of those significant acquisitions they've made recently? Acquiring companies takes capital, and that often means taking on debt.
That's a critical question, absolutely. Management is clearly very focused on generating attractive returns on invested capital. That's a key metric for them. They cite a return on invested capital, or ROIC, of 13%. To put that in perspective, for a heavy industrial company, anything consistently above 10% is typically seen as value creating, and 13% is strong, especially considering the substantial capital deployed in recent significant acquisitions like Atrion and ARAG. It's worth noting that trailing 12-month figures might temporarily appear lower due to the large goodwill from these substantial acquisitions, which are still in the early stages of integration. This actually speaks to their future potential. As these acquisitions are fully integrated and optimized under their NBS framework, we'd expect to see those ROIC numbers climb even higher over time. Their trailing 12-month return on equity, or ROE, is also a very healthy 15.6%, again indicative of strong management of shareholder capital. Now, regarding debt, yes, the balance sheet has certainly seen an increase in debt following those strategic acquisitions, no doubt about it.
As of the third quarter of fiscal 2025, total debt stood at approximately $2.12 billion. However, this appears to be very well managed. Their net debt to trailing 12-month EBITDA leverage ratio is 2.2x. Management explicitly states that this is well within their targeted range and comfortable for a company with such strong cash flows. They seem okay with it. Crucially, their powerful free cash flow provides a clear and robust path to servicing that debt and delivering the balance sheet over time. They can pay it down. Furthermore, their liquidity position remains solid, indicated by a current ratio of 1.69. So while they've strategically taken on debt to fuel growth, it appears to be carefully managed within a healthy financial framework. They haven't overextended themselves, it seems.
Okay, let's pivot back to the Ascend strategy. It keeps coming up throughout our research, and it sounds like much more than just a corporate buzzword. It seems truly foundational for Nordson's future. What are its core objectives, and how is it actually reshaping the company on the ground?
You're absolutely right. It's the cornerstone of their transformation, not just talk. Launched in 2021, the Ascend strategy is Nordson's comprehensive blueprint for growth, designed with very clear and ambitious financial objectives. Reaching over $3 billion in annual sales with EBITDA margins consistently exceeding 30% by fiscal year 2025. This isn't just an incremental improvement plan, it's a fundamental framework for reshaping the entire business, built on three interconnected and mutually reinforcing pillars: organic growth, disciplined strategic acquisitions, and proactive portfolio optimization. Let's break down those pillars quickly. First, the NBS Next Growth Framework. Think of this as a highly disciplined, data-driven sieve, like the famous Pareto principle, the 80-20 rule. Nordson uses this framework to constantly identify the 20% of their products, customers, or markets that generate 80% of their profit and future potential. Then, crucially, they invest disproportionately in those high-value areas. Focus their resources. This means they're not just chasing growth, they're pursuing smarter, more profitable growth, shedding less profitable parts of the business, and relentlessly focusing resources where they will yield the highest returns. Second is fostering an owner mindset. This is interesting culturally. It means pushing decision-making power and accountability down to the teams closest to the customers, empowering them almost like they're running their own small business within Nordson. It's about cutting through bureaucracy, fostering entrepreneurial spirit, and allowing for much faster, more agile responses to market changes and customer needs, which is absolutely crucial in today's dynamic industrial environment. And third, winning teams. This pillar emphasizes robust talent management, focusing on attracting, retaining, and developing top-tier talent, and cultivating an inclusive culture that fosters innovation and collaboration. What's particularly fascinating, maybe even telling, is that this entire strategy bears the unmistakable influence of CEO Nagarjun's extensive 23-year career at Illinois Tool Works, or ITW. ITW is renowned for its disciplined 80-20 approach and highly decentralized entrepreneurial model. So Nagarjun is effectively implementing a proven high-performance playbook for profitable, sustainable growth at Nordson. He knows this model.
It sounds like a truly transformative strategy, very structured. And within that, acquisitions are clearly a central part, a big lever. These aren't just small tuck-ins, are they? They sound like significant, truly transformative moves that are reshaping Nordson's capabilities and market focus.
You're exactly right. Nordson's M&A strategy is very deliberate, very targeted. It targets niche market leaders with highly differentiated technologies, specifically in high-growth markets that are genuinely additive to their core competencies. They fit. The goal isn't just to buy revenue, it's to acquire platforms for future growth that can then be significantly accelerated by leveraging Nordson's global scale, its direct sales channel, and the operational rigor of the NBS Next framework. It's buy and build. Let's look at some key examples that powerfully illustrate this buy and build playbook. First, Atrion Corporation, acquired in August 2024 for approximately $800 million. That's a big one. This is a massive boost to their medical and fluid solutions MFS segment. Atrion brought with it a leadership position in proprietary medical infusion fluid delivery and highly specialized niche cardiovascular solutions. Very specific tech. Crucially, Atrion boasts a substantial portfolio of single-use consumable products, which further enhances Nordson's already impressive recurring revenue base, making the entire business even more resilient and predictable. More of that sticky revenue.
Then there's the R Group, acquired in August 2023 for $960 million. Also very significant. This was a particularly bold and visionary move, marking Nordson's strategic entry into the high-growth precision agriculture market, a whole new area. ARAG is a global leader in smart fluid components and control systems, specifically designed for agricultural spraying. Think high-tech farming. This acquisition is a fantastic example of applying Nordson's core precision dispensing competency to a completely new adjacent market, helping farmers improve crop yields, reduce chemical and water use, and directly aligning with global sustainability trends in food production. It really shows the incredible transferability of their core technology. And finally, CyberOptics Corporation, acquired in November 2022. Smaller, but strategic. This deal significantly strengthened their Advanced Technology Solutions, ATS segment, by adding a leader in high-precision 3D optical sensing technology. This technology is absolutely critical for advanced test and inspection processes in both semiconductor and electronics manufacturing, enhancing Nordson's capabilities at the absolute cutting edge of the electronic supply chain. This buy-and-build playbook is about acquiring a niche leader and then applying Nordson's operational and commercial horsepower to accelerate growth, expand margins, and extract maximum value. It's a highly repeatable model for long-term profitable growth.
Okay, so acquisitions are key. But beyond these specific deals, Nordson is also strategically positioning itself to capitalize on some really big long-term trends, often referred to as mega trends, that are fundamentally reshaping industries globally. They're not just reacting to the present, they're proactively aligning with the future.
Absolutely. That's a crucial part of the strategy. Their entire Ascend strategy is meticulously aligned with powerful secular megatrends that are driving demand across various sectors for decades to come. Firstly, advancements in medical technology. We have an aging global population, the rising prevalence of chronic diseases, and a global shift towards minimally invasive medical procedures. All these factors collectively drive an increasing and sustained demand for sophisticated, high-precision medical components like catheters, fluid connectors, and single-use devices, which are central to their medical and fluid solutions segment. This is a demographic and technological tailwind that is definitely not slowing down anytime soon. Secondly, the proliferation of advanced electronics. Our increasing reliance on data, connectivity, and artificial intelligence means exponential growth for semiconductors, complex printed circuit boards, and increasingly miniaturized devices. Nordson's ATS precision dispensing and inspection systems are not just helpful, they're absolutely essential for manufacturing these next-generation components. This is especially true for critical high-growth applications like EV battery assembly, the build-out of 5G infrastructure, and the rapidly expanding need for advanced components in AI data centers. Their technology is an enabler of the digital age, really. And thirdly, automation and sustainability. Across all industries, there's an undeniable, relentless push for Industry 4.0, which fundamentally means greater factory automation. Companies are looking to improve efficiency, reduce labor costs, and enhance precision, all of which directly benefit Nordson's automated dispensing and inspection systems. Simultaneously, the global focus on sustainability drives demand for their products, which help customers minimize material waste, apply environmentally friendly materials with extreme precision, and reduce their overall environmental footprint. These three megatrends are not fads. They are powerful, irreversible forces shaping the future, and Nordson has positioned itself right at their intersection. Very smart positioning.
It's clear they're adding strategically, focusing on these megatrends. But it's not just about growth by addition, is it? It's also about pruning and refining the existing portfolio. Tell us about their portfolio optimization efforts within the Ascend strategy. What are they shedding?
Yeah, you've hit on a critical nuance of sophisticated portfolio management. It's not always obvious, but it's key. A key, often overlooked, part of the Ascend strategy is actively managing the business to continually enhance its growth and profitability profile. It's not just about what you buy, but also what you strategically divest to sharpen your focus. A recent and excellent example of this is the divestiture of select contract manufacturing product lines within their medical interventional solutions business, which was completed in September 2025. This strategic sale allows the MFS segment to sharpen its focus even further on higher-value, proprietary medical components, where their competitive advantages are strongest, and crucially, where their margins are better, higher-value stuff. This move is explicitly expected to be accretive to the segment's EBITDA margins, meaning it will actually improve profitability even as it slightly reduces revenue in the short term. This demonstrates management's clear willingness to optimize the overall portfolio quality, even amidst broader market challenges, showing a disciplined and long-term approach to value creation.
They're not afraid to make tough decisions for the greater good of the business, even if it means shrinking slightly in one area to strengthen the core.
Okay, but no company, regardless of its strategic prowess or strong moat, operates in a vacuum, right? The period of 2023-2025 has been particularly dynamic globally, marked by significant economic uncertainty and shifts. How has Nordson been impacted by these broader macroeconomic slowdowns? Were they immune, or did they feel the pinch like everyone else?
Well, they certainly felt the pinch, and quite directly, they weren't immune. The primary headwind Nordson faced has been a broad slowdown in global industrial activity, leading to what management has consistently referred to as dynamic demand conditions and weakness across multiple end markets. That's the corporate speak for things slowed down. This directly impacted their organic growth. We saw a 3% decline in fiscal 2024 and a reported 9% organic sales decrease in the first quarter of fiscal 2025. Those are real numbers. Industrial customers facing economic uncertainty, higher interest rates, and inflationary pressures naturally became more cautious. They pulled back, they delayed large capital equipment purchases, hunkered down, and took a wait-and-see approach. It's a classic cyclical pattern that affects many industrial companies, and Nordson, despite its resilience, isn't entirely decoupled from these broader economic forces.
So given those macroeconomic headwinds, how do these challenges play out across their different business segments? We know they're structured differently now. Were some parts of their business hit harder than others? And how did they respond specifically in each area?
Yeah, each segment indeed faced its own specific challenges, reflecting their unique market exposures. It wasn't uniform. The Industrial Precision Solutions, IPS segment, being the most exposed to general industrial capital spending and broader economic cycles, saw weaker demand for its larger, more discretionary systems, particularly in areas like polymer processing and industrial coatings. This led to a 2% organic sales decrease in the third quarter of fiscal 2025. Customers were simply deferring major investments in that area. The Medical and Fluid Solutions, MFS segment, faced a different kind of challenge: significant customer destocking within its medical interventional product lines. After a period of really high demand during and immediately post-pandemic, many customers had built up excess inventory. They just bought too much too fast. As supply chains normalized, those customers began working down their existing stock, which temporarily suppressed new orders. This resulted in an 11% organic sales decline in the first quarter of fiscal 2025 for MFS. Management, however, views this largely as a temporary inventory correction, not a fundamental shift in long-term demand for medical devices, which they believe remain strong. Just working through the backlog. And the Advanced Technology Solutions, ATS segment, focused on electronics, was perhaps hit the hardest initially. It succumbed to the well-documented severe cyclical downturn in global electronics and semiconductors, experiencing significant double-digit organic sales declines through much of fiscal 2024. This was a widespread industry issue, impacting virtually every player in the semiconductor and electronics supply chain. It was rough for everyone there. However, here's the silver lining, and this is a really crucial detail for our listeners. The ATS segment has recently shown strong, very encouraging signs of recovery. It posted robust 15% organic sales growth in the third quarter of fiscal 2025. That's a big swing upwards. This is driven by a noticeable rebound in demand for its electronics dispense product lines. This suggests that the cyclical trough in semiconductors and electronics may finally be passing, which is a very positive indicator for the company's near-term outlook and overall momentum. It signals that the underlying demand drivers in electronics are reasserting themselves. That's good news for them.
That is a crucial detail, the recovery in ATS, a really positive sign. But despite these significant challenges declining organic growth in some segments, that destocking issue, major cyclical downturns, Nordson hasn't just survived, they've maintained exceptional profitability, as the sources put it. The question, of course, is, how did they achieve this? It seems like a masterclass in operational strength under pressure.
It truly is a masterclass in operational excellence, and a real testament to the effectiveness of their management team and the Ascend strategy, particularly that NBS Next framework. They didn't just hunker down and wait. They leveraged NBS Next to rigorously manage costs, optimize operations across every single business unit, and proactively allocate capital to the most resilient and profitable areas. They were active. This disciplined execution is precisely why they were able to maintain best-in-class profitability, delivering record EBITDA dollars in fiscal 2024 and consistently holding EBITDA margins above that 30% mark, even with those organic sales declines in some key segments. This ability to decouple profitability from top-line cyclicality is a key indicator of a high-quality management team and a truly resilient business model. It's not easy to do. It proves their competitive moat isn't just theory. It translates directly into financial strength during downturns. They also continued with proactive portfolio management, like that medical divestiture we discussed, even during these tough times, demonstrating a clear focus on long-term quality and strategic advantage rather than simply riding out the storm. This is the mark of truly exceptional management, in my opinion. Very disciplined.
That's a powerful demonstration of resilience, definitely. Very impressive execution. Now, let's shift gears slightly and talk about how Nordson rewards its shareholders. They have an incredible track record with dividends, don't they? It's quite rare to see such consistency, especially in the industrial sector.
They absolutely do. It's quite remarkable. Nordson is a proud, long-standing member of the elite S&P 500 dividend aristocrats. This isn't just a fancy label. It means they have increased their annual dividend for an astonishing 62 consecutive years. Think about what that signifies. 62 years means navigating countless recessions, market crashes, wars, technological shifts, and economic downturns. Always generating enough consistent cash flow to not only pay but increase dividends to shareholders year after year. That's a powerful testament to their long-term financial stability and consistent performance, demonstrating a deep, unwavering commitment to shareholder returns. In August 2025, the board approved another 5% increase in the quarterly dividend at $0.82 per share, following a substantial 15% increase just the year before in August 2024. Critically, the dividend payout ratio remains a very sustainable 39% of earnings. That's healthy, which leaves ample cash for continued reinvestment back into the business, supporting both organic growth and strategic acquisitions. They can do both. Beyond dividends, they also utilize share repurchases as part of their capital allocation strategy.
It's another tool in the toolbox. While primarily used to offset dilution from things like equity-based compensation for employees, they've shown a willingness to be opportunistic with buybacks when they feel the price is right. For example, in August 2025, a new $500 million share repurchase program was authorized, bringing the total available for buybacks to approximately $800 million. That's a significant amount. This signals management's strong confidence in the company's intrinsic value and future cash flow prospects, providing an additional avenue for returning value to shareholders.
Okay, dividends and buybacks sound solid. Now for the big question. How does the market actually value all this precision, profitability, and strategic transformation? What do their valuation multiples tell us about how investors currently perceive Nordson, especially when you compare them to their peers and the broader market?
Right, that's where we tie everything together from an investor perspective. Nordson currently trades at multiples that definitely reflect its status as a high-quality industrial technology company. It gets respect from the market. Its trailing 12-month TTM price to earnings, or PE, ratio is around 28.0x. However, the forward PE, which is based on estimates for next year's earnings, is significantly lower, down in the range of 20.4x to 22.3x. The TTM enterprise value to EBITDA, or EBITDA, which many analysts prefer for industrials, is in the range of 17.0x to 18.2x. Now, when we benchmark Nordson against direct peers like Graco and ITW, you see that Nordson is broadly in line with this high-quality peer group. It's trading at a slight discount to Graco currently, but at a similar or maybe slight premium to ITW, depending on the exact metric you use. What's crucial here is that all three of these companies, Nordson, Graco, ITW, trade at a significant premium to the broader industrial sector average. The sector average is typically around 20.0x PE and maybe 10.2x EV/EBITDA, so these guys are clearly valued higher. This confirms that the market explicitly recognizes these companies, and Nordson especially, as superior businesses, commanding higher valuations due to their stability, best-in-class margins, and deep competitive moats. The market sees the quality. What's particularly fascinating about Nordson's current valuation is that notable difference between the TTM PE, around 28x, based on those cyclically depressed earnings we talked about, and the forward PE, closer to 20 by 22x. This indicates that the market is already anticipating a strong earnings rebound in the coming year, especially with that ATS segment showing signs of recovery. Investors seem to be looking past the recent trough.
Okay, that makes sense. So for someone looking at Nordson, maybe considering it, bringing all this together, what are the primary drivers of potential value creation moving forward? What's the bull case? And equally important, what are the main risks that they should be aware of? The bear case, if you will.
Right, the core investment thesis for Nordson, the bull case, is essentially that it is a high-quality industrial compounder, a consistent performer, but one that is simultaneously in the midst of a significant strategic transformation designed to enhance its long-term growth profile and its resilience. It's quality plus a strategic pivot. The primary drivers for future value creation seem clear. First, earnings growth from strategic transformation. The successful integration of those significant acquisitions like Atrion and AirAg is expected to accelerate both revenue and earnings growth, bringing new, high-growth platforms fully online and optimized. Second, margin stability and expansion. The continued rigorous application of the NBS Next framework, coupled with proactive portfolio optimization like that divestiture, should sustain and potentially even grow Nordson's already best-in-class profitability over time. And third, a cyclical recovery. The company is incredibly well positioned to benefit from an anticipated recovery in the broader electronics and general industrial markets, and that would layer additional organic growth on top of their strategic initiatives. So both strategic and cyclical tailwinds could align. But of course, no investment is without risks, and Nordson has its own set to navigate. The bear case points to a few things. The most significant is probably execution risk. Large acquisitions are complex, no doubt about it. A failure to effectively integrate new businesses like Atrion and AirAg could lead to lower than expected returns, potentially pressuring the balance sheet or distracting management from the core business. Integration has to work. Then there's always macroeconomic risk. A severe or protracted global recession, something worse than what we've seen recently, would undoubtedly overwhelm even their strong secular growth drivers, significantly impacting earnings and customer demand across the board. Technological obsolescence is always a concern in rapidly evolving markets, particularly in electronics. Nordson must continually innovate to maintain its competitive edge and that valuable IP moat that can't stand still. And finally, increased financial leverage. While that 2.2x net debt to EBITDA ratio is stated as being within target, it does make them more vulnerable to severe downturns or unexpected operational challenges compared to a company with less debt. It reduces flexibility somewhat. So it's a balance of growth, ambition, and financial prudence that investors need to watch.
That's a very balanced view. So if someone were to consider Nordson as a potential addition to their portfolio based on everything we've discussed, what's the recommended time horizon? Is this a short-term play or something longer? And what's the current cyclical positioning they should be thinking about right now?
Yeah, good questions to wrap up on. Given everything we've discussed, the acquisitions, the Ascend strategy, the market dynamics and investment in Nordson should absolutely be viewed with a long-term horizon of at least 3 to 5 years, maybe even longer. This time frame is genuinely necessary for the full integration of their recent significant acquisitions to really bear fruit financially, and for the compounding benefits of the Ascend strategy, the margin improvements, the focused growth to truly reflect in the company's financial results and ultimately its market valuation. These things take time. The current cyclical positioning, in my view, appears quite attractive, actually. They've successfully navigated the trough of a downturn in several key markets, proving their business model resilience through disciplined management and that crucial focus on recurring revenue. They passed the stress test. The recent strong recovery in their Advanced Technology Solutions segment is a powerful signal that the worst may be behind them in that critical market, and that cyclical tailwinds are starting to reemerge. So an investment now could potentially capture both a cyclical upswing and the long-term strategic value creation from their ongoing transformation. It's about having the patience to capture that compounding effect over several years.
Okay, so summing up, from precision dispensing in those maybe unglamorous but vital industrial settings, to critical components in advanced medical devices, and the tiny, intricate parts of the latest electronics, Nordson Corporation is truly a hidden giant. We've seen how their Ascend strategy is driving a deliberate pivot towards higher growth, more resilient markets, all backed by formidable competitive advantages, strong and consistent financials, and a highly disciplined management team.
Yeah, what truly stands out to me, looking across all the sources, is their remarkable ability to maintain that best-in-class profitability, even during significant macroeconomic headwinds and sector-specific downturns. This isn't by accident, as we've discussed. It's a direct result of their powerful recurring revenue model and the rigorous data-driven NBS framework. Discipline pays off. The recent robust recovery in their Advanced Technology Solutions segment suggests that while challenges in the broader industrial landscape certainly remain, the company is emerging stronger, more focused, and exceptionally well-positioned for future growth and continued value creation.
So here's a final thought for you, our listener, to mull over. Given Nordson's strategic shift into these high-growth areas like precision agriculture and medical technology, and their proven ability now to integrate significant platform-type acquisitions, what new unexpected adjacent market could be the next frontier for their precision dispensing expertise, and what would exploring that possibility tell you about the future of industrial technology itself?